Dobro utro. That's the only thing I speak in Macedonian, so sorry for that. Although yesterday we were actually having an interesting dinner where we found out that the languages are actually not so different. If I come here more often, I would probably understand a little bit more. I would like to say something about, briefly about the history and about the market in Czech Republic, how we progressed in the last 20 years. Then I want to slightly touch upon the international development as I see it from our perspective, being member of the European Union and being, I would say, small to mid-sized European exchange. And as a last topic, I would dare to issue a few recommendations which I would see in Macedonian situation as quite important, basing on our experience from Czech Republic. The Prague Stock Exchange was founded in the beginning of the 90s, and it received a big present in the very beginning. We had the project of the voucher privatization, which was an experiment with the pluses and minuses. Unfortunately, later we saw that there were maybe more minuses than pluses. However, all of a sudden, in the one June day of 1993, the Czech government listed in one day 1,700 companies having over 6 million shareholders. So that was a big bang start of the capital market. Obviously, it led to the lot of the things you don't want to see. The people who were owning the shares were inexperienced, the issuers were inexperienced, and there were few people, coming in and using the loopholes in the regulation. And I would call 90s as a textbook of the financial criminality. And this is a good example how the market was functioning in the 90s. You saw simply everything, starting from front-running, asset stripping of the funds, hostile takeovers without paying minority shareholders. So worst of the worst, you can imagine, that was happening on the domestic capital market. It's a little surprise that the capital market had tremendously bad reputation on the end of 90s. There were very few people actually trading on the market. And maybe interesting number, from these 1,700 companies which were listed, there are 5 traded now actively. The rest was bankrupt or delisted or taken over, or simply something happened with the companies. We were starting from the scratch basically again around the year 2000. Thanks God help to the local market, which I was actually at that time part of. The exchange somehow survived and developed relatively nicely during the last decade. Prague Stock Exchange was mutually owned till 2004, when it was sold by the local banks and brokers to the Wiener Börse. So we are now part of the CSEC group, which consists of Vienna, Prague, Budapest and Ljubljana, working together on the project as equal partners, I have to say. This is a cooperation which is tremendously interactive. We working on a common projects. We are communicating and cooperating very well. One of the first examples what we did in the group together is that we unified the selling of the market data, and we're gonna follow up with the unifying of the trading system, where we gonna implement Citra probably next year. It was already implemented in Ljubljana. In Vienna it was implemented some 9 years ago. We would definitely unify also on the post-trade technology. There is a situation a little bit more difficult because all the four exchanges have completely different starting line as concerns the ownership and the structure of the post-trade environment. While we in Prague hold everything, starting from clearing to settlement and to center depository, this is not the case in other countries, and actually in every other country it's a little bit different. So it could be quite difficult to find a structure for the mutual agreement on how to structure the post-trade environment. We think that we're going to start sometimes during next year with the common CCP, while the center depositories will stay on the national level independent. What we see as a major driving force in the group is attracting more international investors, attracting more international members. Obviously, Vienna Stock Exchange have a very good experience with attracting many international members after they changed their system to Xetra from their old system. We think the same development should happen in Prague. It's not like that the international investors would not be active on the Czech market. They are actually the most active part of the investors, but they are not directly members of the exchange, which of course is the different story. You like to have as broad membership as possible. You like to have all your international members who are trading your local stocks to be direct members of your exchange. For them it's going to be much more easier because most of them already have a link to the Xetra system, either as a vehicle how to trade Frankfurt, and or they even are members of the Vienna Stock Exchange. Right, so that's roughly about our group, our strategy for following years. I would say in 1.5 years, maybe 2 years, we find ourselves as exchanges on single system, hopefully with unified center counterparty, as I mentioned, working on a post-trade environment. There's going to be a lot of the work on the legal and on the IT side, and also on the membership side. We are finding out that implementing of the new trading system and new trading logic is not only IT and legal exercise, but it's very much a business exercise, because usually what is linked to that is some change of the revenue schemes for the members, and they are obviously they don't like many revenue changes, especially on the way down. Now I would like to slightly touch upon the international development. I do see last 5 years when I'm in the exchange industry, because before that I was an investment banker, I do see 3 major things which are happening in the industry. The first is coming waves of the M&A activity. You saw wave of the M&A activity somewhere 2005 when, or before even 2005, when first deals on the Euronext and OMX were done, you know, with the smaller exchanges merging together. Then there was a wave of the activity in 2007, 2008. Now we see again activity around the New York Stock Exchange is very well covered in the press. It's mainly driven by the cost reduction in the moment, these M&A activities, and I think this will simply happen more and more, especially in Europe, because in Europe, due to the regulatory events, the environment leads to the necessity of the merging of the exchanges. That's lead me to another point, which I would see as very important on the, especially in the European market. It's implementing of the new rules, especially MiFID, and its consequences. I'm probably only one who is sitting in the seat of the semi-important stock exchange in Europe who dare to say that MiFID was flop. I'm saying that repeatedly on various conferences. I was coming to the conference since 2004. I joined the exchange in 2004, so I immediately start to visit the conferences in order to meet the people. And there was a time when people were speaking about the MiFID. As a newcomer to the industry, you see incredible difference between what were people saying before the MiFID was implemented and what they are saying after the MiFID was implemented. Before, there was a conference where in one room there were 10 new possible stock exchanges in Europe, saying we're gonna be the new platform, we're gonna take all the volume from the old exchanges, we're gonna build a completely new and quick things, there are gonna be many exchanges in Europe. You just went out for coffee, you went in, there was another panel, and there was a panel about the integration. And there was basically similar people from similar institutions speaking about that all the exchanges will merge, and there will be much less exchanges in Europe in the next 3 years. Nobody actually knew what's going to happen in the future. And I would say in that contents, the MiFID was experiment, quite expensive experiment, which cost a lot and cost European transparency, and it caused a lot of the fragmentation on the market. I would just give an example from Czech Republic. Before MiFID implementation, there was executed close to 100% of the trades with local stocks on the markets.